Are you an active real estate investor and you're worried there's too much risk in the multifamily market right now and that maybe you should wait and not get started or not buy something? Well, actually, the opposite is true. There's less risk now than there was 2 years ago, and there's actually more buying opportunity. So in this video, I'm going to explain why that is so you can make better investing decisions and not miss this major wealth creation opportunity. Hey, my name is Michael Blank, and I help people become financially free with real estate. So this is the end of the multifamily area as we know it. Multifamily is no longer popular. People don't want to invest. They're scared, and they're looking elsewhere. And it's because of what's going on in the news. A lot of news and media about foreclosures and this, that, and the other thing. And maybe you know someone or you've been invested in a deal, maybe that's gone bad. Maybe the distributions have stopped on that deal, or maybe there's capital calls, or you know someone is involved in capital calls. That just doesn't feel like it did 2 years ago. Now, 2 years ago, it was the height of the market. March of 2022, now we know, was the high point, highest prices in the history, lowest cap rates, and everybody was getting into the multifamily space. And now we're kind of, at the low point. If you look at the pricing, it has bottomed out, the pricing, sometimes 40% below it was 2 years ago, and it's starting to come up again, right? So now you feel like there's opportunity, but my goodness, all these things have happened. We feel burned. We feel like there's still blood in the streets. We should probably wait until some of it is gone. But is that the right thing to do? And my response to that is no, it's not. As a discerning entrepreneur and real estate investor, you should be asking questions, what's going on right now? And how can I take advantage of the opportunity, if there is one? What does that opportunity look like? And how do I take advantage of that opportunity? And that's what we're going to talk about next. So let's look at a comparison of what's going on and compare that 2 years ago. So 2 years ago, right, we had record low interest rates, record high prices, and record high loan proceeds, which has to do with how much debt you get. Now, all those things add risk. If you look at the risk-adjusted return or the risk of an investment, it's kind of in the high end, right? Because the consensus was that interest rates are going to go up. Therefore, it's kind of risky bottom part. Prices have been higher. Cap rates have been the lowest they have in, since 2005. Okay, so if it's kind of at the high end of the spectrum, you're like, okay, it's kind of riskier. Loan proceeds, you can get 80% loan to cost, meaning that you get 80% of the purchase price as well as the construction. That's a lot of leverage right there. So in the scheme of things, highest leverage that you can probably get. So it feels like higher end of the risk spectrum. Now look at the deals. We have a deal under contract now called Overlook, and that is a completely different animal. Interest rates, basically the high point. The consensus is that interest rates are going to be flat or slightly down. 2 years ago, consensus was going up. Obviously, now the interest rates, it's flat or going down. They're certainly not going up by another 7%. Okay, so now we're kind of at the lower end of the risk spectrum with interest rates. Let's look at the loan proceeds. Loan proceeds, we can get 70% of loan to value only. We're no longer getting debt on construction. So now the loan proceeds, the leverage is actually a lot lower, which of course lowers the risk. Look at the type of debt. The type of debt, some of our deals that were distressed in the industry using floating rate debt, which is what you use for example, ground up development projects use floating rate debt. That's the only way you can get in something that's not stable, okay? So we were getting in there and it was understood it was a little bit on a higher risk. It was manageable. Turns out that some of those floating rate debt was problematic. Everyone knew it added a layer of risk. We were just not aware of how much at risk it actually created for us. But the point is this, from an investment perspective, from a timing of the market perspective, 2 years ago was the height of the market, and you can argue now that we're at the bottom of the market for the reasons I just mentioned: interest rate, loan proceeds, fixed rate, use of fixed rate debt. And so now the only question is, okay, is there buying opportunity, and what is the outlook for multifamily? The outlook for multifamily is very strong. In fact, the fundamentals have never changed because the demand for affordable housing is still there. It actually never changed. You can't build any more affordable housing, right? Because you can only build luxury Class A apartments. That's not affordable housing. So you have a fixed housing stock and a growing population who wants affordable housing. What's that going to do to the rents? It is going to drive up rents, and it's continued doing that until it's solved, which we don't know what's going to be solved. We don't know what the plan is, how people can solve it. Therefore, there's going to be ongoing demand for affordable housing. Now, the third question, if the risk is less, okay, and the fundamentals are strong, then what about buying opportunity? We're seeing an increase in deal flow as well because buyers back in 2022 who wanted this price are like, if I want to sell my lifetime, I'm going to have to compromise my asking price, and that price has come down, We're also seeing some distress from operators who are not performing well. They maybe have some floating rate debt and they're struggling with the operations. They can't refinance. There's loan workouts done with lenders. Short sales are a thing. Most of the deals are happening in the off-market space. So we're starting to see deal flow come up. So putting this all together, we are getting, I believe, an incredible buying opportunity, which is going to be an incredible wealth creation opportunity. I think the biggest we've seen since 2008. I mean, I should have backed up the truck in 2008 and bought every multifamily. Instead, I got into restaurants. Okay, silly me. All right, be that as it may. And I did flip houses in my defense, but had I gotten apartment buildings, it would have been unbelievable. So let's not make that same mistake twice. You're not flipping houses, you're not wholesaling, you're not doing the Burr method. You're getting into apartment buildings, and now is a great time to get started. So what do you do? What you do now is you need to get educated. Watch all the videos on the YouTube channel, listen to my podcast, but you may have to invest in your education as well, because there's only so many things I can do for you with YouTube content and my book. You may have to look at some of our programs, maybe consider working with us and one of our mentors. But anyway, the point is get educated. Right? Get educated now, build your team now, build your property manager, your lender, build your team. And here's the thing, you want to start talking to brokers now to get access to these off-market deals, because I don't think you're going to see them on LoopNet or the news. They're going to happen quietly in the back. And they're happening in the background. So you want to be able to talk to brokers now. So this is an amazing opportunity that we have. The previous multifamily, the era has ended. It has completely and utterly changed, I think, for the better. We have lower risk and higher buying opportunity that we're seeing. So we went from 18 months from relatively high risk deals to relatively low risk deals because of the rate hikes. The bottom line is the deals we're buying now are much less riskier than 2 years ago. So get started now. Get educated now, build your team. And I want to help you do that. Check out my Apartments 101 Masterclass. That's what I created to help introduce you from the beautiful world of real estate investing, single family house investing, introduce you to apartment building investing. And the cool thing is you don't need single family house investing. If you have it, that's great, but you don't need it. And you also don't need a bunch of money in the bank as well, because we're going to teach you how to raise it from private individuals who are also looking for cash flow and a return on their money. So check it out. Check out the Apartments 101. The link should be below.